Good morning, traders. It is 8:02 a.m. Chicago time. Thanks for joining me this morning. This is episode number 2257. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. There were some issues there for a minute with YouTube. Had to quit the broadcast and go to the backup server. Thank God for that. So we started a couple of minutes late here. A quick look at the, oh, man, that's not good. 1 second, please. There we go. I'm not sure why my monitors have flipped. Sorry about that. So a quick look at the convergence trading pre-market summary sheet. The market is in a risk-off posture this morning with the Europeans leading the pack. The DAX down 192 basis points, 255 points in the DAX, trading at 13,000, around the 13,000 mark. S&P off 56 and a quarter points. Right now we're opening at the lower edge of yesterday's trading. It looks like, is that right? No, that's not correct, because yesterday's trading, RTH trading was 37, 36 or so. So we're opening in a gap this morning. We are right now at this price. If you recall, yesterday we talked about this a fair amount. 37.11 in the S&P is that key double top that was broken, that initiated the whole narrative about the push higher. This morning we're seeing allocation out of cyclical groups and into safe havens. These are utilities, staples, telecoms, basically dividend-paying stocks. There are more and more recession forecasts coming through. This morning we have we've had a couple of numbers. We had the Great Britain's inflation rate came in at 9.1% versus a forecast of 9.2%. The prior is 9%, so the inflation rate there is rising still. Core inflation in Great Britain, 5.9% versus, which is better than a 6.1% forecast. It's definitely better than the prior month at 6.2%, so the core inflation looks to be stabilizing in Europe. The inflation rate out of Canada also came out much, much stronger than expected, beat by about 10%. Expected at 7%, came in at 7.7%. Core inflation was expected at 5.8%, came in at 6.1%. That was about a half hour ago. So not good there. We do expect Fed's Powell to testify this morning in front of the Senate, is it? I'm not sure. It's either the House or the Senate. So we'll see how that goes. The expectation there, the markets will be listening very carefully, but the expectation is he'll reiterate the same stuff that he has already talked about, and it's not likely to bring anything new. We do have Fed's Evans, Fed's Harker, and Fed's Barkin this afternoon, and they may pepper in Bullard to just give us a little bit of volatility. Get Bullard's like the Kraken for the Fed. After the close, we have the API crude oil stock change of 430, and then we have the S&P global numbers out of Australia, a couple numbers from Japan. That wraps up the day. Check out Crude. Crude is off quite a bit this morning, off almost 7%. It is in a bit of a nosedive here as it heads towards $100 a barrel. This is still, what's being cited here is that the supply out of Russia really is uninterrupted. All that the sanctions have done against Russian oil is make oil more expensive for the planet in general, made Europe scramble for gas and crude oil. but it just reallocated. It took the same flow, made it expensive, and reallocated the flow of crude around the planet. That's all it did. India and China enjoying Russian oil at advantageous prices, and overall that supply apparently is not off the market. So we're seeing that drop. That combined with Biden's POTUS Biden's trip to Saudi Arabia, whose single purpose is to discuss how prices can be lowered for crude oil. So we see that product is under pressure. I'll frankly tell you, here in Chicago, the pump is not getting cheaper, even though oil has dropped about $15 from its highs. Still seeing pumps that are selling for $6.49 a gallon. I get it. I grew up in Europe. That's chump change versus what people pay in Europe and even Canada, but that's extremely high for the U.S. So I'm not seeing the relief there. I'm expecting prices to come off at the gas pump, but I'm thinking pockets are getting filled right now across the energy sector. So let's turn our attention on the S&P. The S&P is in a multi-distribution profile this morning. I'm just going to go over the metrics here. 246,000 contracts have traded. The inventory in the S&P is 100% short this morning, 100% short. Yesterday was 100% long. And the range is 74.5 points. So my expectation this morning, based on what the S&P is doing, by the way, I didn't see if I got a sound check. Hopefully I'm not blowing up your speakers or something. I feel like I'm being loud this morning. 74.5 points of range. What I'm seeing here is a high probability of really good opportunities today. In my opinion, there's always risk of loss in trading futures. I want to remind everybody that it's not suitable for everybody, but I'm expecting today to be a day where you want to cut off the distractions, close the door to your office, and pay attention. We're coming in with about 75 points of range. We are in between the upper and lower distribution. We'll go over that in a minute. And the expectation is that both sides will have will have to put some money in or defend some money in this fight as we open right here at 37.11. So let's take a look at that. The point of control is at 37.09. It has moved dramatically lower than where it was yesterday, which was up at 37.34. And the overnight point of control yesterday didn't get touched in the day session. That's a statistic that we track. It's about 75% or so. Yesterday happened to fall into the 25% range. We had a strong run yesterday that made it so that we had to lay off of this selling. So let's take a look at the S&P. Oh, sorry, guys. This is really annoying that it does this. Here we go. So let's take a look at what we've done here yesterday. Now, remember, we're moving away, and I talked about this quite a bit yesterday. I talked about the importance. Hey, why don't I do this? I know these are getting long, and I don't have very much time, but I really need to make sure that folks are following along, that I'm not leaving anyone behind, but also that you're aware of your price map. Can you remind me, based on yesterday, based on what I said yesterday, what the key prices are? Go ahead and blurt out the key prices from yesterday for the S&P. Let's see if you recall, and let's see, because there are a lot of talking heads on YouTube. We want to see if the market respected those prices. So go ahead and blurt them out. Okay, 37.11. I've got 37.11, 37.40. Let's make it sound like an auction. 36.75, 37.35. 37.40, okay, that's a repeat. 37.80, actually 37.75, 37.77, good job. So those are the prices. Those are the most important prices, 37.77, 37.75, depending on whether you look at a TPO or a volume chart. Below that, 37.40, below that, 37.35, below that, 37.11, below that, 36.75. Am I right? So those are the key prices that I talked about yesterday. And I said that since we blew through the 37.11 here yesterday, and we were opening way up here in the 36 area, that it's not likely to push lower. But if it does and it breaks the 37.11, then I'm looking for a weak retest of 37.11 for 36.75. So that's the 36.75. So I just talked about 37.11, right? This is the over underline. This is right here. Very important area. This is the low volume node. The most valuable price from this box right here is 37.40. That's this peak right here, 37.40. That's basically where we opened yesterday, okay? And then the support underneath us, immediate support underneath us, I said was 37, 34, 35, which is basically yesterday's low, okay? So yesterday's RTH low, 37, 35, 50, right? So nailed that one. We went directly into 37.40, and I said if we hold that 37, 34, 35 area, you can watch the video from yesterday's pre-market. I said if we hold that 34, 35 area, there's going to be a lot of pressure to push through the 40 to where? 37.75, 37.77. Okay? Look at where it went. I said the magnet is right up here at 75. Okay, 75, 77. Again, depending on whether you're looking at a TPO chart or a volume profile chart, which I prefer, but I also use TPO charts for the bigger picture. When I'm looking at the big picture, I move to TPOs. And we push to 75, and we battle in this area. And those of you who are convergent saw that that's the first and only time I took shorts. I took a short around 73 and 76.50. The 73 stopped out. 76.50 pushed back to 70.50 as the best scale out, or the BSO. That was a trade that I talked about yesterday, and we stalled at the 37.75. Did I expect it to stall here? Yes. Did it stall there? Yes. Am I a genius? Absolutely freaking not, because it is random. It can do whatever it wants. It doesn't mean that I know what I'm talking about. It just means that I happen to expect something and the market happened to align with it. It doesn't really take away the probability of a loss. It doesn't take away the fact that I may be wrong and I need to have my stops in case that I am. Okay, so I'm not talking about being perfect or being a genius here. None of that pays the bills. And then since then, so let's zoom in a little bit. Since then, so we went to this through the 75 into the 80, pulled back to 60. Very important, this pullback right on top of the RTH mid. Tough place to get long there. And then it pushed, and we had our trade talk yesterday, convergent, and I said, listen, if it keeps holding that 60, and if it's staying in the 75 area in the afternoon, it's basically forming a bull flag. And given that the high that was put in that morning was a double TPO high, let me know if you don't know what that is. A double TPO high, meaning it was a weak high, that it's likely to take out that high, which was at 81 and a quarter, something like that. I posted images of this in the Convergent Trading Head Trader channel, stating that we are likely to blow through that to correct that high. There's a high probability that would happen. It's in the 80 percentile Historical probability, the probability of it happening in a session is, what's the probability of it happening yesterday if it has a historical probability of 83%, 82%? What's the probability that it would happen yesterday? Come on, people. You should know the answer. I've talked about this in Chat with Traders, the Crude Futures Radio Show, pretty much Futures IO. I've done a billion videos on it. It's 50-50. The historical probability is a line, looks at the past. The outcome for the next time it happens is always 50-50. Forever and to eternity, it's 50-50. It's always 50-50. Because that's just one sample that then becomes a historical probability. The fact that I might have put up 99% winning trades, does that not mean that the next trade I take has a 99% probability of winning? It does not. It has a 50-50 chance. It'll either win or lose, and then it gets piled on with the hundreds of thousands, maybe over 1 million trades that I've taken, and it just adds to that probability. Okay, just remember that. This is why we use stops. This is why the only thing we can control is risk. Everything else is random. Okay. So what have we done since? We have fallen through. Then we have continued. So we had an impulse. We've had a continuation. And guess what? We gave up the 37.11, and we are trading right at the 37.11. This is beautiful, because what we have done is reinforce the double distribution nature of what the market is doing. So what we have done is we went up and built an even bigger TPO chart, bigger high volume node. You could see yesterday, see how yesterday, is this random? The market has memory, has price memory. So we went right back into this balance, built this high volume node yesterday right on top of the 37.75, 77. And what we're doing is trading right there, people. We're trading right here. So we are in a, it's exciting because we are in a very clearly defined risk-reward scenario here. These kinds of days could be big days because the market either holds below the low volume line, call it the line in the sand. Remember, we have a double top here. See that double top, right? It either holds below, in which case, if it holds below, where does it go? I'm going to drill this back again and again. If it holds below, where does it go? It rhymes. If it holds below, where does it go today? If we open and we push through the 37.11 and we're just weak trying to get above it, where is it likely to go? What's our target? 36.75. It moves back to balance. 36.75. So we've moved from 75 to 75, and we're in the mid of those two, basically. The mid here is 25. We're below it, but that's price action, but volume is what matters. Volume and the profile is what matters. And we are battling to stay above the lower distribution. If it gives up this 37.11 and it looks like if we have an impulse down and then it has a pullback that is weak, I'm going to look to get short, and I'm going to look for that 75. So what does that mean to me in the current setup? Let's move to the active trading chart. What does that mean to me? So we are right here. You can see there are large trade dots. There weren't at the low, but we see that participants are starting to take positions here right before the open, which is happening more and more these days. What we see is it may push to 20 or whatever, but what I'm looking for this morning is an impulse down. If I see an impulse down, my plan is to trade the pullback, look for the pullback, have it fight maybe in this region here, the 15 or so, look for the short, and if I get the short, the goal is 75, 36.75, for it to fall back into balance. Okay, so what does that mean? What does that trade mean? That's a trade that has a target of about, depending on where you get in, 35 to 40 points. It has a risk of about 5 points, 5 to 5.5 points. If you're all in or out, if you're all in and out, that's a 7R trade. Excellent, if you can get it. I'm not all in, all out. I scale out, so my return on risk is reduced in favor of securing risk. So at the end of the day, I'll end up with something like a 4.2, 4.5 R trade, something like that. And if somebody comes to you and says, doesn't matter what the product is, doesn't matter what the contract specs are, doesn't matter what the time frame, I have a trade that's going to give you a 4R return. I'm not going to tell you the win rate or anything, but it's a 4R return. Will you be willing to bet a reasonable amount on that? I am more likely to take that trade not knowing more than the R factor. Very important to have a strong R factor. You heard it here. So, even if it's 11% winning or something like that, I'm not likely to get killed on that trade, even if it doesn't work out. And if it does, then I get paid pretty well for the risk, right? So really important factor. I posted this chart in the Convergent channel. I don't like sharing member data, but this is what I posted this morning because I think it's important to know your map. My early morning map is really to look for sell signals against the 25-28 and of course the 11. This is my price map. The stock zones, you must be thinking, well, why do you use stock zones if you're going to just throw some other stuff on there? The stock zones also provide a map, but the stock zones are looking for a bigger picture. They also include the gap data and things like that. They're looking for a bigger context, but the immediate context is we open. Remember, the inventory is 100% short, so we expect the market to try to balance that a little bit on the open. I'm looking short up to 37, 25, 28. Beyond there, I'll look to get long into 40, 43. If it pushes the 40, 43 and pulls back, might add or take another trade, 40, 43 to 37, 60. And then now we're in a gap to settle situation where the market's being responsive and going back and is aiming to go back to that 37, 67, 75 settle. There's about a 70% historical probability of touching the settle price in the current session. I'm not going to draw lines on the chart other than to say, let's go back to the intraday, other than to say the main trade is an attempt early, an impulse down. I'm going to wait for the impulse down. I'm going to give up a bunch of prices to see the impulse. Then I'm looking for the pullback. I'm looking to sell the turn on the pullback. And if that's the situation, then my target is down here at, at the 75. Okay, so that's the primary, that's the key trade. That's a trade that's basically saying, hey, we're selling off. We couldn't hold the upper balance, and we're likely to test the HVN of the lower balance, so 36.75. If not, we open up, we test down, we kind of take a peek below the low, and then come back in, and we have an impulse higher. Then I'm going to be trading for those levels that I just gave you, 25, 28, 40 to 43, 57 to 60, and then back to settlement, and that brings us back to 75 as the target above. 100 points of range, 100-point bracket that we're in. Very important to keep an eye on your price map and know the road ahead. I know I talked a lot today, but there's a lot to learn when we have structure like this. Good luck, and I'll catch you tomorrow morning. Take care.